This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Friday, wiping out gains from the previous session, on worries that the U.S. Federal Reserve will accelerate plans to boost interest rates to tame inflation. Brent crude futures fell 70 cents, or 0.8%, to settle at $82.17 a barrel. U.S. West Texas Intermediate, WTI, crude fell 80 cents, or 1%, to settle at $80.79 a barrel. Both benchmarks fell for a third consecutive week, hit by a strengthening dollar and speculation that President Joe Biden's administration might release oil from the U.S. Strategic Petroleum Reserve to cool prices. On a weekly basis, Brent fell 0.7%, while WTI declined 0.6%.
Asia liquefied natural gas, LNG, prices rose this week following 3 weeks of decline as demand increased in China after a sharp drop in temperature, while market players eyed Russian supply into Europe. The average LNG price for December delivery into Northeast Asia rose to $31.50 per metric million British thermal units, up $2, or about 6.8% from the previous week, industry sources said. Sustained below normal temperatures could deplete inventories rapidly and send buyers back to the spot market, where prices need to remain elevated to hold the arbitrage against the TTF, Emily McLean, senior gas markets analyst at Rystad Energy, said in a report.
Moving on to the top news in the energy sector.
Chinese coal traders are selling cargoes at losses or trying to delay imports after Beijing's market interventions triggered a 50% price drop that saddled them with unprofitable supplies, according to several market participants. Domestic thermal coal futures have halved over the past 3 weeks after the government ordered top miners to slash prices to a set target and raise output immediately to curb prices that had nearly quadrupled this year. The consequence of the Chinese government's intervention is imports are likely to slow in November and December after already easing in October.
2 weeks of UN COP26 climate talks in Glasgow blew past a deadline on Friday as the conference president called on countries to make a final push to secure commitments that would rein in the rising temperatures that threaten the planet. With a deal now expected sometime on Saturday, there remained tough talking to be done on issues such as the phasing out of fossil fuel subsidies, carbon markets and financial help for poor countries to tackle climate change. A draft of the final deal, released early on Friday, requires countries to set tougher climate pledges next year, in an attempt to bridge the gap between current targets and the much deeper cuts scientists say are needed this decade to avert catastrophic climate change. Next, we have the top news in metal markets. The United States said on Friday it will open talks with Japan that could lead to an easing of tariffs on steel and aluminum imports, a long-standing irritant in trade relations between the two allies. The U.S. Commerce Department and the United States Trade Representative's Office said the talks were aimed at addressing global steel and aluminum excess capacity, restoring market-oriented conditions and preserving critical industries. The discussions with Japan follow an agreement by the United States and the European Union to end a dispute over steel and aluminum tariffs, and hammer out a global arrangement to combat dirty production and overcapacity in the industry.
China will step up exploration of strategic mineral resources including petroleum, natural gas, copper, chrome, tungsten, rare earths and others during 2021 to 2025, the top economic planner said on Friday. The National Development and Reform Commission revealed the plan for promoting development in resource-dependent regions on its website.
We will now look at the top news in the agricultural sector.
Corn prices in China have pushed to multi-month highs despite the advancing harvest after wet weather slowed crop collection just as record energy prices pushed up grain drying and logistics costs, analysts and traders said. New crop corn futures on the Dalian Commodity Exchange have rallied nearly 9% in the past month to their highest since June, while key cash markets in the east and south of the world's second-largest corn consumer have climbed sharply in recent days. Rains and snow delayed sales of the new crop to market in Liaoning Province, the northwestern and northern regions, while logistics at ports in Liaoning was suspended due to the bad weather, said Meng Jinwei, senior analyst with Shengda Futures.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.